Market Prospects, delivering timely information and education to prairie farmers for 30 years. Market Prospects is brought to you by the University of Saskatchewan's Department of Bioresource Policy, Business and Economics, and these sponsors. Log on to marketprospects.usask.ca to view past programs and for information on upcoming programs.
Our Market Prospects interview this week provides a detailed look at Praire Farmland Values. Joining us from Regina is Corinna Mitchell-Beaudin, Executive Vice President and Chief Risk Officer with Farm Credit Canada. Ms. Mitchell-Beaudin, thanks for taking time to come on Farmgate.
Oh, you're welcome. Thank you for having me.
Well, FCC's 2014 Farmland Values report has been released. Can you give us a snapshot of what's been happening with farmland values across Canada and specifically here on the prairies?
Oh, certainly. Farmland values over the last calendar year continue to be significant, but what this year's report reveals is that the rate of increases are moderating. For 2014, farmland values across Canada increased on average 14.3%, and that's compared to 22.1% in 2013. The rate of increase is slowing down in all major agricultural regions in Canada, including Saskatchewan, Manitoba, Alberta, Ontario, and Quebec. But Saskatchewan continues to see the highest rate of increase with a year-over-year increase of 18.7%. Manitoba also saw double-digit increases with a rate of increase of 12.2%. The other two western provinces had single-digit increases. So I would say that all of this points to a strong ag economy fueled by growing global demand for food, low interest rates, as well as the potential for new export markets.
So who is buying prairie farmland, and what's the relationship of current farmland prices to productive value in agricultural use?
Well, in terms of your first question there around who is buying farmland, I would say what we observe at Farm Credit Canada is that the vast majority of purchasers are farm families and producers themselves. There's no denying that there is a presence of non-traditional buyers in certain regions, but again, the vast majority of transactions that we observe are between producers and producers themselves. The second part of your question regarding price relative to productive values, I think I'd make two comments on that. If you reference Stats Canada information that's published on their website, where they provide data on the average value of farmland per acre by each province, you'll see that Saskatchewan as well as Manitoba continue to have values that are below those of other parts of the country. So what we're seeing here in terms of year-over-year increases continues to be that catch-up effect relative to other parts of the country. The second point I'd make on that front is that one of the main drivers of farmland values is cash receipts. And so if you compare farmland values relative to cash receipts, that ratio that you get is a good barometer of their productive value. And in Saskatchewan, that ratio compares favorably to the ratio that we've seen over the last 30 years. So all of that suggests that the prices that we're seeing today are in line with the productive value of land in Saskatchewan.
So what is the relationship between farmland prices and rental rates, and what's FCC observing when it comes to land rental arrangements and rates on the prairies?
Well, there's definitely a relationship between farmland values and rental rates, and what we would say is that that rental rates take time to adjust to new market conditions. And so given that commodity prices and cash receipts and in turn farmland value increases have come down over their recent highs, it is not out of the realm of possibility that rental rates will be a bit sticky. But if commodity prices remain at these new levels for the foreseeable future, it is highly probable that rental rates will come down. The other trend that we are seeing is that producers and landlords are tending to enter into more longer-term arrangements, say 3-year contracts versus the more traditional 1-year term. And those longer-term arrangements may also contribute to a longer duration for rental rates to come down.
So what risk factors should young farmers be aware of when buying instead of renting land, And what risk management strategies should they consider?
Well, the single most important thing that we would encourage producers to consider is their cost of production, both variable costs as well as fixed costs. This is a starting point for all decision making. Price is also an important consideration when making a purchase decision, but it's not the only consideration. I think you have to consider timing, location, your personal goals, as well as your business plan and your financial stability and strength. Land is definitely a valuable asset, but there's no one-size solution to fit all in those rental versus purchase decisions. So we would encourage producers to really understand their costs of production, have a sound business plan that gives them lots of room to move, given the variety of scenarios that they could face on the revenue and expense side. I suppose the one last comment I would make regarding a risk management tactic is that producers could consider locking in some of their borrowing costs given the low interest rates that we are currently seeing here in Canada.
Well, great information and insights, Corinna. Thank you very much for coming on Farmgate.
Oh, you're very welcome. Thank you for having me.
Okay, Farmgate, we'll be back after a few messages.